Hello, this is Rick Cortez with the Westwood Broadmark Tactical Growth Strategy Update for October 2025. Two important pillars of our investment process are positive. Monetary policy and credit conditions are good, and momentum remains favorable. The two pillars that are negative are valuation and investor sentiment. As for valuation, we are in the top quintile of historical valuations. Valuations could go higher. We could rival the dot-com bubble top in 2000 and the 2021 top. But right now, we would have to say that valuations are negative. From a long-term point of view, investor sentiment is negative. I want to point out to you three classes of investors that are getting far more optimistic than they have been, which is negative from a contrary point of view. Number one, U.S. households have more in common stocks than ever before. The chart on your screen shows that this reached a new high in the last few months. The next chart on your screen shows that there is a very tight correlation between the level of household investments and subsequent stock market performance. This is a chart going back to the 1950s, which shows that when households have had this much stock, the subsequent 10-year performance has been in the single digits, and it has often gone into the negative territory. Now that's curious, and you ask, has that happened before? And the answer is yes. It happened in the 1970s, and it happened in the 1930s. Now, on a personal note, I remember the 1970s as being those up and down markets. I wasn't alive in the 1930s, believe it or not, but my partners and I are students of market history, and I can tell you that our tactical strategies are ideally suited to these kind of markets, should they come. Number two, foreign investors have been pouring money into the market. As you can see on the chart here, this reached a new high in the last month. And number three, finally, mutual funds have committed to the market. This chart shows that cash on hand at mutual funds, the cash to assets ratio, is at an all-time low. There's an old saying on Wall Street, when the crowd is fully invested in the market and you go to sell, the question is, to whom? One of our guidelines is beware the crowd at extremes. Are we at an extreme? It does not seem so yet because monetary policy and credit conditions and momentum are all positive. I think what is happening here is valuation and investor sentiment from a long-term point of view are indicating we're nearing a time where one should be more cautious on the market. Maybe this is the canary in the coal mine for the future. But for now, we are long the market, and momentum and monetary policy remain positive. So this is Rick Cortez. Thanks for joining me. Please join me in November for the next update.